Welcome back to another episode of Harmonious at Lunch, the show that fuels your business success. I'm Brandon Gano, your host and guide through the world of harmonious business growth. Today, we're unlocking powerful strategies with industry experts to help your business thrive. If you're a business owner, entrepreneur, or executive, you are in the right place. Join me and our incredible guests today on the journey to clarity, growth, and success. It is time to revolutionize your approach to business. Let's dive in with another episode of Harmonious at Lunch. Welcome back to some more bite-sized business advice, and this has got to be one of my favorite topics ever to talk about. And maybe that's just me, maybe that's you, the listener, too. But we're going to talk about how to save taxes legally. Yes, that's right. We're not going to get chased down by the government and thrown in jail. At least I hope not for this, at least. I don't know what you do in your personal life. That's up to you. But as far as saving taxes legally in your business, in your personal life, we are going to pay the government less after this episode. I'm jacked up. I'm no expert in this area, but I have one with me. Her name is Sally Gimon, and she's going to dive in and unpack this for us. So before we go any further, Sally, welcome to the show.
Thank you for having me, Brandon. I want to get this message out to as many U.S. business owners and 1099 income earners because they don't know it, and everybody wants to save taxes.
I hear you. I think of one client that comes to mind where she told me what the size of the check she wrote to the government last year as we're trying to figure out, do we hire new employees? Do we bring on software to replace employees? I'm like, oh, cool. We could do that. We have this much money set aside. And she goes, yeah, that's pretty much what I'm going to owe the government. I said, hang on a minute. That's not cool. That's like two people's salary. So let's help some business owners. I too, obviously have a passion for helping small business owners, and we got to get to the bottom of this. So tell me, what are we doing? Because it's legal, so we're not stuffing cash under the mattress. What is the way that you help people save on their taxes legally?
The way I help people is with the Spendthrift Trust. It's legal. It's in the IRS tax code 643B, like Bravo. The full name of the trust, so everyone has it, is irrevocable, complex, discretionary, non-grantor, Spendthrift Trust. All 5 elements are very, very important. And just so people know, the Spendthrift Trust has gone in front of the United States Supreme Court on 2 different occasions. Both times the Supreme Court has honored that. I work on behalf of the law firm, the Benson Financial Trust. It was written 76 years ago by Paul Benson, a Harvard law professor. They give a certification saying if you're ever questioned by the IRS, they'll defend you free of charge. And in 76 years, it only happened once. And it upheld, the IRS agent upheld the trust. So it's an amazing thing. Personally, I've saved 6 figures in the 3+ years I've had my trust, both my business trust and my beneficial trust.
That's incredible. And I want to talk about too, because you shared this briefly before we started recording, your personal story of why you went down this path, because I feel like a lot of people can relate to that. And some people have even been in this situation. And I'll tell you what, before you share the story, I found myself in a very similar situation in the past too. So I know that you're not alone. I know I'm not alone. For the listener though, tell us how you got here.
I became a real estate investor back in late 2018 when my mom got sick. Thank God she got better, but she was on a ventilator for 13 months, in a hospital for 15 months. In 2019, working full-time as a Medicare broker, worst job in the world, I wholesaled 7 properties nationwide. I knew about capital gains. I had set aside $50,000 in all my profits, paid off all my debt. I'm a rock star in my real estate group until my CPA calls me in April of 2020 and says, Sally, you have to come in the office. I went in. He says, you owe the federal government $79,000. My personal tax rate went from 22% up to 24%. There's a jump on it. It goes from 12%, 22%, 24%, then 32%. All of a sudden, I owed the federal government $79,000 in short-term capital gains, and I had just paid off my house, and I had to take out a HELOC. Defeats the purpose of paying off my house. Take out a HELOC to pay my tax bill. I had read an article about the Rockefeller's Trust. It's called The Office. And if the Rockefellers can save taxes, why couldn't I save taxes? So I researched it for 5 months, found the private law firm that has the copyright on the Benson Financial Trust. I started teaching in my mastermind in my real estate group because real estate investors need to know how to save capital gains, interest income taxes, and rental income taxes. And then one of my coaches said, Sally, You're not doing things big enough. Start your own business and help small business owners. Anyone who's a business owner or a 1099 income earner will save at least 90% on their federal income taxes yearly, and in 43 states no longer pay state income taxes. So state of North Carolina has no idea I'm here. Everything I own is in my trusts, and I don't have to pay state income taxes anymore. And for 2022 and 2023, I saved 92% in federal income taxes. I only had to pay 8%. I was happy to pay 8%.
Yeah, right. It's a way more digestible number.
Yes.
And it's funny too, because I used to live in New Jersey. I'm in North Carolina now too. One of the reasons I came here was because the taxes are ridiculous.
Yes.
And I was property taxes in particular are very high, which I know we're not talking about that, but it's one of those things, like, really you can't get away from it unless you know about a tool and a product like what we're talking about here. So I want to unpack.
And just to let you know, Brandon, you're not tax free. We're only saving federal income taxes or capital gain. That's with the business trust, capital gains, interest income, dividend income, rental income, and royalty income taxes with the beneficial trust. So you're always going to pay taxes. I don't know where you live in North Carolina, but I purposely go to South Carolina to buy gas and food because it's cheaper there.
Mm-hmm. Yeah, not close enough, unfortunately. But if I want to make a day trip out of it, but no, it makes sense. We're going to pay taxes. I don't want to say anything too negative about the government, so they don't come shut my podcast down. But we have tools to get around a lot of it, which is what we're going to talk about. So I'm curious to dive in. So in setting up a trust, you gave the very specific name that I will not try to to say here, because I can't remember all 5 of those elements. That's okay. They're going to be in the show notes. Don't worry. But what does it look like in terms of, you said you don't own anything and the government doesn't know you're here because it's all in the trust name. Can you unpack that for me a little bit? Because that might be confusing for people who have never heard about this.
Well, if you have an LLC or an S corp, which being a real estate investor, I shut down 6 LLCs. LLCs are statutory law. So what happened in Arizona is a corporation commission. Here in North Carolina is the Secretary of State. Anybody can go onto the website for the different states and research the LLCs, and 40% of all LLCs each year get sued. Because the Spendthrift Trust is what's called the non-grantor, someone who's not a beneficiary, someone who's not part of the trust, signs up to be the settler, and then is a trustee for less than 5 minutes and signs away. So that makes the trust 100% private, and all your assets are kept in that trust, and nobody knows how much you own, where you own it, what you do with it. My property taxes for my investment properties come to my beneficial trust name. When my bank account, I have a debit card. I just sign my name, Sally Gimon, and then at the end of it, I just write TT, trustee of the trust. I mean, that's the only thing that is different for me.
Interesting. So did you say this was non-litigatable, the trust?
Correct.
Okay.
So,
yeah,
so if someone tries to sue you, a true story, one of my clients has 100 doors in Chicago. The reason he started the trust, the renter's dog got out and bit the mailman. Mailman hired an attorney, found 4 of the LLCs, not the 96 other LLCs. The mailman got paid $400,000. Last summer, I have never seen Patrick's RV, but knowing Patrick, it's a beautiful, gorgeous $500,000 RV. The trust owns the RV. Patrick's driver's license has his Illinois license and everything else because it's his name. 4 weeks after the accident, he gets a lawsuit in his name saying, Patrick, you owe this woman $500,000 for pain and suffering. All he did was send the first page of the trust to the attorney, and the lawsuit went away. I mean, $500,000 lawsuit that just becomes frivolous. That's amazing. I mean, besides saving rental income taxes, he's saving lawsuits, paying lawsuits and everything.
Yeah, that's incredible. I mean, even in a normal business context, this happens all the time, whether it's in normal business dealings with customers, with business partners, whatever. Not that we're advising, don't mishear this. We're not advising you to go break the law and do anything stupid, but
if you do something stupid or illegal in the trust, you pierce the veil. So yes, you don't want to do that. You want to follow along. The first page of the IRS tax code says it's up to each individual to save as much money as they can individually. When the tax code went into effect back in February of 1913, the super rich families, the Rockefellers, the DuPonts, the Carnegies, they put it into the tax code. And not making fun of CPAs, I'm dyslexic, but it's up in 643B, and accountants work in the 300, 400 level, and they're not trust attorneys. That's the difference between there are a million attorneys out there, and only 4% of them are trust attorneys, and that's who they're the ones who make sure you're doing things correctly.
Yeah, and this is why it's such a valuable topic for this show, because I mean, my belief and my philosophy behind starting Harmonious at Lunch was we need to build a complete entrepreneur, and that's everything from your body, your physical health, your mindset, your business, your relationships. There's so much more to business than really what's on the surface. And what you said there is each individual person is responsible for saving as much as they can. I'm paraphrasing, but that's how I feel about business. Like, should you, the business owner, be an expert in accounting and saving on your taxes? No, but you should have the resources in place at your disposal to go to your CPA and ask questions. And that's why I love shows like this.
Correct. And most CPAs are true story. Here in Charlotte area, we had the multifamily a group here. One of the guys, I had lunch with several people. He sends me an email and says, my CPA says that this isn't true. And I said, textbook that trust attorneys study in law school is called Scott and Asher on Trusts. Someone sets up an appointment on my calendar, I get on the Zoom, and it's his CPA, and he's like, I have no idea this existed. Can I send you more clients? I'm like, of course. Let's JV together.
You can't.
No, I don't want to help you. I don't want to help your clients. Yeah. So, I mean, some CPAs are really open to it. Other CPAs are, you're taking away my business. I'm like, no, I'm helping your clients save money, and then you can invite more people to your CPA business and everything.
Yeah, first of all, I'm sorry. If a CPA is that dumb where they get paid on the percentage of the amount of taxes you make or pay, first of all, fire your CPA. Second of all, this will do nothing but attract more clients. I'm the CPA that saves people 80 grand. Yeah, you're awesome. You're going to have clients out the door. That's
exactly.
That's so help me, Sally, unpack this a little bit. Can we talk about the mechanics of this trust? Because we understand, I've heard of it. I don't have one. I'm gonna get one after this episode, but I don't have one. But I understand. I understand what it is, how useful it is. Can you unpack the mechanics of how this works for, let's say, a small business owner? Our clients, our listeners are that upper 6 to 7, 8 figure range. Like, how are we using this product?
I suggest you should be making at least $80,000 gross a year. I have a free course out in the Great Discovery that has a chart for all 50 states. 7 states don't have state income taxes. So if you live in South Dakota, Nevada, Texas, or Florida, you'll be saving over $11,000 a year. If you're living, unfortunately, in New Jersey, you'll be saving almost $16,000 a year, year after year, generation after generation. The application is 5 pages. It's got a lot of information on it. You decide what the trust name is. You do have to pay either by certified check or by wire. They won't take it by credit card because that can be canceled. You get a new EIN or employee identification number and a letter to go to your bank to open up a new bank account. Depending on what your business is, you're going to start funneling all that business into that new bank account. For some businesses, it does take a few months, do payroll and things like that. There's a whole team that works with you, to set up the trust correctly. You'll have to go to the DMV to change the title on your vehicles to put into the trust, things like that. But we're here to help you. It's not just, hey, you pay it and then you go away. I have actually had several people get on set up a meeting with me who the attorney is not there anymore, and I try to help them as much as I can, but I don't know the legalities of their trust. I just know what the Benson Financial Trust looks like, and it's an amazing thing. When you sell your business, Brandon, I don't think people know this. You'll pay either 15% or 20% on capital gains when you sell your business. I just helped somebody at the end of April save either $460,000 or $600,000. He's 69. His wife is 63. This money is for their retirement. I mean, that's 6 figures for the retirement that they now have instead of paying taxes.
Yeah, it's amazing, and I love how you unpack that. It makes sense. Talk to me though about, the what is the how does the business look? That's what I'm curious. So, let's say I'm the founder, the owner of the business. It's in my name now. I've set up the trust. We're putting everything in there, whether it's vehicles, payroll, bank accounts, all that stuff. When in the daily operations of the business, does anything at all change? Like, are there any nuances or complexities to get this set up in the transition period? Or is it really just operating the same way a normal business would be, just under a different paper, essentially?
Correct. You're going to change. My favorite pizzeria here in the Charlotte area, husband and wife, two locations, make about $15,000 a month, $180,000 a year. They had to change their receivables and their accounts to a different bank account, and then start running things through it. So for a full year, both state and federal income taxes, they save over $34,000 a year. And with that savings in 2024, they opened up a third location. Again, their normal running the pizzeria is the typical things. They just had to change how, like, how do I say this? Like, your how your payroll is done, how your money comes in and goes out. You just have to set up the new bank account. I personally have 17 different bank accounts at Wells Fargo because I have 17 different properties underneath it. I got 12 notes. I've got 3 seller financing houses because I need to keep track of who's paying and who's not, because I'm unfortunately going through a foreclosure right now on one of my notes.
So all of those are still within the same trust. So the trust owns
Correct.
all 17 accounts?
Correct. So my banker at Wells Fargo, when I come in, he just sets it up and we use the address as the new bank account, but it's under the same EIN. There is a different EIN for the business trust and a different EIN for the beneficial trust. So there are two different, they're written for two different purposes, if that makes sense.
Yeah, absolutely. And I'm curious too, when so you have the business in a trust, but then you as the owner, founder, whatever it is, you don't technically own the business, right? The trust owns the business. That makes sense. You still have to get paid by the business, whether you are W-2, you only take bonuses, or whatever structure you're set up under. How does that money get handled too? Because I understand the business isn't paying the federal income taxes, but how do you avoid yourself personally paying those taxes too?
So if you're the trustee and you have the debit card, it's going to pay your homeowner's insurance. It's going to pay your light, your gas, your garbage pickup, everything else. And then with the, let's say you go to the supermarket, you're going to use the debit card to buy your food. We go out to dinner with your wife. You're going to buy the bottle of wine, the food, things like that with the debit card. Only thing you have to do, and it's easy to do now with online banking, is just print it up and have that information. You will file a 1041 tax return. That is super different than filing a 1040 tax return. And we introduce you to the CPAs who know how to file the taxes correctly for you. Quite honestly, the team that works with you, they're there to work with you as long as you want. Most of my clients are done with the team in under 2 months. They're like, oh, this is easy. I understand what I'm doing.
That's amazing. This just, the whole thing fascinates me. I can't remember if you shared this while we were recording or beforehand, but can you just reiterate for me, for the listener, how much you saved in 3 years of doing this? Because if you're not ready to go and set up one of these right now, you need to hear this. So Sally, please, how much have you saved?
I have saved 6 figures. I'm a real estate investor. I've wholesaled 29 properties in 3 years. I have 3 rentals. It's changed here. The market's changed. So instead of wholesaling, I now do what's called seller financing. That's interest income taxes. I have a crypto bot. I'm reinvesting my money. What I'm working with right now, I have 9 nieces and nephews. Some of my nieces and nephews have astronomical student loans. So I'm now, I'm financial free. I'm now helping my nieces and nephews because they need to be financially free too. I mean, my one niece has over $70,000 in student loans, and she's only making about $30,000 a year. I'm like, how the heck can she live like that?
It's crazy. I love that you're using it to give back to family. That's amazing. So for you, the listener, wherever you are, Sally, you have the website here is on the screen. It's also in the show notes down below if you're listening. thetrustisyou.com. You said that was a short video or a course. Tell me a little bit about that.
Have you ever heard of Six Sigma?
I have, yes.
Well, Six Sigma is over 40 years old. They just did a new launch on March 15th for the Great Discovery. It's competing against School and Kajabi. So I do have a free course out there. It's called Save U.S. Federal Taxes, because they've got courses all over the world. Unfortunately, I can help foreigners who have property in the United States, but I can't help people outside of the United States. This is just the U.S. IRS tax codes. I've got the 3 articles from Forbes on the Great Discovery. I've got the chart for all 50 states saying there's 7 different layers to taxes, from 10% to 37%, 4 ways to file your taxes: single, head of household, married jointly, or married separately. Unfortunately, single is the most expensive way. So I'm showing each state, if you make $80,000 gross, how much you would save per state. And it's amazing to see how some states are super expensive and other states like, oh, I need to move there now. Not that I'm ever going to move to South Dakota, but it's cheap there.
That's funny. That's awesome. I encourage you to go check that out. If you're listening to this, watching it, wherever you are, taxes are expensive. And,
Yes.
I feel about the government the way I feel about the government. So maybe don't pay them so much. And
I'm not anti-government. I love being an American. I can honestly say that, but you spend the money you save, you can spend it any way you want. You can give to charity, you whatever you want to do.
I believe more money should be in small business owners' hands and pockets, because we can do good with it. And I appreciate you sharing this wisdom and knowledge with us. So I have to ask this question. I love to end these episodes with asking a question, but from you asked the question this time. We believe that powerful questions get powerful answers. So in the context of what we've talked about through this episode, whether it's setting up trust, saving money, saving on your taxes legally, anything, what is the question you would want to leave the listener to have them think about for the rest of the day, the rest of the week, whatever it might be? What is that powerful question that can get them on the next step to saving on their taxes?
If you could be saving at 5 figures in taxes every single year, what would be the number one thing you would pay off? Would it be your mortgage? Would you get a new car? Would you help a family member out? Would you give to charity? What would you do with that 5-figure savings?
If your answer was, I would buy a Lamborghini, first of all, check your math, because you can't with 5 figures. But also, not your show, okay? We're not here for you, but for the rest of you doing good in the world, giving back to your local economy, supporting your family, what would that do? What would saving 5 figures do for you on your taxes and your expenses and your employees too, and in growing your business? So think about that question. I think that's a great question, Sally. Thanks for being here and being an amazing guest.
Thank you, Brandon. I appreciate you having me.
All right, for you, the listener, make sure you subscribe. Go check out the link down there, thetrustisyou.com. We want to see you back tomorrow on another completely ridiculous episode of Harmonious at Lunch, but we love this. We love doing it for you. We'll see you then.